Why can't investors be honest with themselves? Most investors believe they are rational. They think, I make data-driven decisions. I'm disciplined. I'm long-term. Yet behavioral research consistently shows a gap between intention and behavior. Why? Because investing is not only financial, it is psychological. And self-honesty is emotionally expensive. Let's examine why investors struggle to be honest with themselves. Self-deception protects ego. 2. Loss aversion distorts memory. Behavioral economists Daniel Kahneman and Amos Tversky demonstrated that losses are felt about twice as intensely as gains. This creates emotional resistance to admitting losses. Investors may hold losing positions too long. Avoid checking performance. Focus selectively on winning trades. Honesty requires confronting pain. The brain prefers avoidance. 3. Overconfidence bias. Research by Barber and Odeen shows that investors who trade more frequently tend to earn lower returns. Overconfidence is a major driver. Investors often overestimate their predictive ability, their risk tolerance, their market understanding. Self-honesty requires saying, I don't know. But uncertainty feels uncomfortable. Confidence feels safer than humility. 4. Identity fusion with portfolio. When portfolio performance becomes tied to identity, gains validate competence. Losses threaten self-worth. Instead of evaluating decisions objectively, investors evaluate themselves. Admitting, my strategy failed, feels like, I failed. To avoid that emotional threat, the mind edits the narrative. 5. Narrative bias. Humans are storytelling creatures. We construct explanations after outcomes occur. If a trade works, I saw it coming. If it fails, unexpected event. This hindsight bias makes investors believe they were more accurate than they actually were. Honesty requires acknowledging randomness, which reduces the feeling of control. 6. Social comparison pressure. According to social comparison theory, Leon Festinger, individuals evaluate themselves relative to others. In investing, others post gains. Friends discuss winning stocks. Media highlights success stories. Admitting underperformance becomes socially threatening. It is easier to exaggerate strengths than admit weakness. 7. The illusion of control. Markets are complex and partially unpredictable. As argued by Burton Malkiel in A Random Walk Down Wall Street, short-term movements contain strong elements of randomness. But randomness is psychologically uncomfortable. Believing, I understand it. I can control it. I can time it. Feels more reassuring. Self-honesty requires accepting limits. Limits reduce perceived power. 8. Emotional avoidance. Investing exposes people to fear, greed, regret, envy. Admitting emotional influence threatens the self-image of being rational. Instead of saying, I bought because of fear of missing out, investors may say, it was a strategic allocation. Emotions get rebranded as logic. 9. Short-term performance distortion. In bull markets, investors attribute gains to skill. In bear markets, losses are blamed on external forces. This self-serving bias protects self-esteem but reduces learning. Honest self-assessment requires separating skill from luck, which is psychologically difficult. 10. The cost of radical honesty. True self-honesty in investing means admitting, I don't control markets. I am influenced by emotion. I am prone to bias. I cannot predict consistently. My risk tolerance may be lower than I claim. This level of transparency destabilizes ego, but it strengthens long-term discipline. Conclusion. Investors struggle to be honest with themselves because ego resists error admission. Loss aversion avoids pain. Overconfidence inflates perception. Identity fusion personalizes outcomes. Narrative bias rewrites history. Social comparison pressures image. Randomness challenges control. Self-honesty is uncomfortable, but it is a competitive advantage. The most dangerous bias is not market volatility. It is self-deception. And the strongest investors are not those who predict best, but those who evaluate themselves most honestly.